Hello everyone, my name is Louis. Welcome to my channel. If this is your first time here, well, thank you for checking us out. Before I begin today, I want you to know I'm not a professional YouTuber. I do not make videos to make money. The purpose I built this channel is to share some of the information that I either have read or learned from other sources, and sometimes I may share my own experience with you. Now, hopefully, this will give you some positive input for your retirement. Today, I'm going to talk to you about the T3s and the T5 slips that you may receive at the end of the year. Often, investors ask why they got a T3 and T5 slips when they did not even receive any income or sold any investments. Well, hopefully after today, you will know the answer. With the mutual fund investments, every year the fund company may pay out a distribution to your non-registered accounts. The distribution represents the allocation of capital gains, dividends, or interest income that was generated by the fund for the investors during the calendar year. You will receive a T3 or T5 slips from the fund company. Obviously, its purpose is to tell both you and CRA how much you have received from your mutual fund investments with your non-registered accounts. But this does not apply to registered accounts such as the RRSP or the TFSA. With the mutual fund investments, every year the fund company may pay out a distribution to your non-registered accounts. The distribution represents the allocation of capital gains, dividends, or interest income that was generated by the fund for the investors during the calendar year. You will receive a T3 or T5 slip from the fund company. Its purpose, obviously, is to tell both you and CRA how much you have received from your mutual fund investments with your non-registered accounts. This is not applicable to registered accounts such as RSP or TFSA. Here is a sample year-end T3 slip. You will find 4 types of estimated income illustrated here. They are the interest income, Canadian dividends, foreign income, and capital gains. In addition, there may be items such as return of capital, which is not illustrated here. Now, this is the income from income trusts and systematic fund withdrawals. They are considered as a return of your investment money and therefore is not taxable. Also, it will show you the amount of foreign tax paid for your foreign income. Included in the sample slip is how the amount needed to be reported as income. For example, interest income is 100%. The Canadian dividends are reported with the dividend gross up and 50% of the capital gains. Talking about capital gains, there are 2 types of capital gains, the fund level and the investors level. Now, at the fund level, the capital gain shown on the annual T3 is from the portfolio manager when they sold securities that result in a profit. Only 50% of that capital gain is included as income. You will notice that there is no capital loss reported on your T3s. It is just to offset the capital gains within the fund. At the investor level, when you sell your mutual fund units, a T3 slip or T5 slip is not issued for the capital gain or loss. You need to calculate your own capital gain or loss and report it on your personal tax return. One thing you need to know, if you buy units of a mutual fund just before it makes a distribution, then you will receive a tax slip and be liable for the tax on that distribution, even though the value of the distribution was reflected in the unit price, but essentially you end up being taxed on income you did not receive. Now I want to show you the difference in how some of the income being reported between mutual funds and segregated funds. Income earned by the segregated fund is reported on a T3 supplemental slip. Now, unlike mutual fund, you do not receive additional units or cash. The income earned just increases the value of your investment. When the fund manager sells securities that result in a loss, 50% of the capital loss are reported on a T3 supplemental slip, and you can use it to offset other capital gains. Additionally, unlike mutual funds, the insurance company of the segregated fund will calculate your capital gains or loss when you sell your segregated fund units. Okay, everyone, that's all for today. Thank you for watching. I hope you find the information useful. And as always, the information presented here is for discussion purpose only and should not be construed as legal, accounting, or investment advice. You should always do your own research or check with your own investment advisors. Well, until the next time, take good care of yourself, and I look forward to seeing you again soon. Goodbye.